Hello, if there's anybody out there, can you hear me? Please let me know in the chat if you can hear me. Hello out there. Hey, Steven, how you doing? Just thought I'd hop on here. Well, kind of a slow Saturday morning. Unfortunately, it's snowing outside a little bit, so got to stay warm. Hi, Nishant. Welcome, welcome. Sometimes at the beginning of these streams, I normally have some prepared remarks, but I'm not sure that I have much right now. But if you guys out there have any questions for me, please feel free to leave them in the chat, or any companies that you're looking at, anything in general. Don't always need to talk business, you know. We like investing, but we also like other things in life, so. There's one thing I could mention, I suppose. The other day, let's see, probably last week, I read this really interesting article, this really inspiring article by a guy by the name of Jeff Gannon, who works with Andrew Kuhn over at Focused Compounding. Their Twitter handle is @FocusedCompound. I think basically they have a really good investing podcast, and they also manage a portfolio, which is really, really something interesting. So they spend part of their time in the media and part of their time managing money, which is pretty interesting. That's sort of the route that probably a lot of YouTuber / investor guys are going for. But Jeff Gannon, a while back, I don't know how old this paper was that he wrote, but it's titled something to the effect of how to invest part-time when you only have 1 hour a day to dedicate to it. And I found that was very, very inspiring. His basic advice boils down to a few key points. One is consistency. Do 1 hour every single day. And if there are days that you have to miss, make it on the weekends. But always do 1 hour of investing per day. And his preference is Andrew does it in the morning before things get in the way, before the day starts, before he has to handle other business. He'll try to get through a 10K or a part of a 10K in the morning. So the first part is consistency. Even if it's only for 30 minutes a day, that is better than missing days or spending no minutes per day. So that can end up doing 365, if you do every day an hour, 365 hours dedicated each year to finding one new investment idea. And another key component of his strategy would be to have a concentrated portfolio. Um, for Jeff Gannon, that's 5 stocks, so 20% allocations with every new investment. You're removing one of those positions and adding another 20% position. So we're not dealing with different position sizings. It's going to be a 5 by 20 portfolio. In some cases, you could go 10 by 10. Monish Pabrai does that with his fund, or at least he used to. But when you break the process down into steps like that, you're not worrying when you're going to sell because you're going to hold these for the long term. You only need to find one good investment idea per year, and you can spend 365 hours looking for that one investment. It's good for the soul, I think. So that approach is something that I've been really leaning into, trying to get my one good hour per day. And if I can't get the hour, I get 30 minutes. For example, this morning I was reading the latest daily journal 10K. Trying to figure out what that business model looks like, and trying to learn more about the portfolio of marketable securities and the traditional business versus the SaaS business that they're building up. And a lot of it isn't revealed in their 10K. Well, they're very transparent, but there are hidden revenues that aren't being reported. Anyway, that's my little spiel. Nishant, you asked, what are your thoughts on Berkshire stocks at the moment? If you mean owning actual Berkshire Hathaway stock, it doesn't seem like it's the worst idea. However, I'm no expert. Buffett has been buying back shares much more rapidly than in the past. So that is definitely a good sign, but that doesn't mean that it's extremely undervalued or anything. I think in the Buffett's most recent annual letter to shareholders, he said something along the lines of he thought Berkshire was slightly undervalued. So if he had the opportunity to buy another public company, he would have done that, but he thought that the slight undervaluation was still worth it to buy back a bigger portion of the pie for himself and other Berkshire shareholders. So I don't know if it's a screaming buy, but it's probably a safe place for your money. I would prefer it probably to an S&P type of investment. But other than that, it doesn't get me too excited, to be honest. It's a nice place to fly to safety, I would say, for me. But I think much larger returns can be found elsewhere. Andrew, hey, did you catch the Rob Vinall shareholder Q&A today? My buddy attended it. I've only watched a portion of the live stream so far. It's probably okay. You'll watch the rest this weekend. No, I haven't, but I'm very much looking forward to Vinall's live stream. I think the 2020, the last one he did was for 2020. He had a live stream, and I learned a lot about the way he manages his portfolio, the way he evaluates businesses, particularly the way he looks at management teams. And he also talks about specific companies. In that last one in 2020, he talked about Wix specifically, and I think another company, and also Facebook, I think. So he's very willing. He's very open in his letters. Now, I've heard recently that a lot of people are having trouble getting accepted to his website where he shares his annual letters to co-investors. I'm not sure what's going on there, but he is very transparent with his investment ideas. And when he has a new big purchase, he goes through his list of reasons why he buys into those companies. So it's really refreshing. And Vinall is definitely a guy who deserves our attention, I think, because of his track record. I think he's been around since 2008. So over a decade in the market is worth paying attention to. So yeah, I'm excited to listen to that. I will probably do that later this afternoon, so I can watch it on 2x speed. Yeah. And Andrew, why did you should have attended the meeting with him? That would have been really fun. If it were a little bit more convenient to get over to Switzerland, I certainly would have gone. But I'm not even going to the Berkshire meeting, and that's much closer to me. So, but hopefully next year I'll head to the Berkshire meeting. And the consistency idea is a good one. Yeah, I agree. I mean, even if it's 30 minutes a day, that's 150 hours of investment dedicated to finding one good idea. That should be plenty to find one idea. There are so many investors sharing wonderful ideas on Twitter, on YouTube, super investors that write in their letters. One of these ideas is going to be good enough for us, I think, if you have the mindset of wanting to hold a concentrated portfolio of long-term holds. It's a little bit more difficult if you are interested in the special situation type of investment or micro caps that you may not necessarily feel comfortable allocating a whole 20% of your portfolio to. That's something I've been looking into right now, actually, is do I take a few, 5% positions in some of these micro caps that I think are interesting, that might make it worth the investment, might make it worth the place in my portfolio, or do I hold out until I find another company that I would want to make a full position? Some of those, one of the companies that I'm thinking about for transparency is called Harbor Diversified, which is, I've done a video on it. It's a regional airline carrier here in the United States. They basically are a subsidiary, they aren't, but they work for United Airlines under a contract. They've got a very reasonable asset floor. So in case of a liquidation, and they also have cash flow coming from continued operations. The trick is right now their contract is up with United Airlines, I think next year, 2023. So there isn't a lot of visibility, but there are a lot of signs pointing to ongoing business. And if not, the liquidation value seems enticing. So it's a little scary. It's microcap. It's got the whole airline thing, but a lot of the expenses are actually handled by United Airlines. So that's a benefit for them. So yeah, that's one I'm keeping a look at, around $2 a share. If it gets to that price, that's where it interests me. Yeah, it's Andrew Brown. Next year, we're going to get a group of YouTubers to go in our niche. Would be cool meetup if it happens to attend Berkshire. Yeah, I'm totally down for that. I feel like trying to attend the Berkshire meeting, you need to start planning the day after that it ends, because Omaha is not a massive city. There are only so many accommodations, and booking travel for this weekend plus accommodations gets very expensive. Now, some might say that it's worth the price, and I'm sure it is. I think having the opportunity to see two not only business greats, but just two of the greatest humans, I think, to ever live, in Charlie Munger and Warren Buffett, in our time. It's not quite like living in the times of Newton or Einstein or anything, but quite impressive. And I remember Guy Spear talking I think it was in an interview, I don't know, a few months back or something, but he basically made the argument that it was worth the pilgrimage to be in the presence of these great people, because of all the psychological benefits you get from mirror neurons and such. So even just being with a group of renting out a bus, that's one option. Yeah, we could get a massive RV caravan going. But just being around like-minded people, or not like-minded people, but people who will challenge you constructively, those are the types of people that you really want to be around. So I think in the Berkshire Hathaway annual meeting is probably the greatest collection of those types of people. Long-term oriented folks, people who are really passionate about continuous learning, not necessarily passionate about picking stocks, because you can invest in Berkshire Hathaway and still love all of the principles that Buffett and Munger espouse. And you don't need to care necessarily about picking stocks. And Berkshire could be your one stock that you hold for your life, and the rest is index funds. And you, you know, you don't need to be a professional stock picker to get value out of those guys, or out of the company that you might find at a meeting like this. So maybe there's a local campsite or something. We can get rent out some cabins or something, rough it a little bit. We'll see. Is anybody here planning on going to the Berkshire meeting this year or at any time in the future? I'm a little worried. I want to get there next year for obvious reasons. Have I looked at Naked Wines? No, not really. I see bits and pieces about that company just on Twitter, and I know that Norbert Liu has a position in Naked Wines, if I'm not mistaken. I don't know much about the business model. I did see that Investing with Tom, he released a video about that. So I'm sure it's good. All of Tom's content is good. So that's probably where I would first stop to get an overview of this situation. Andrew, have you looked into it at all? I'm curious if you have any other good write-ups or suggestions, if you think it's worth the time. Yeah, my pleasure, Nishant. Be interested to hear what you think about Berkshire as well, as an investment, or just as if I owned Berkshire, it would be more so I could call myself a Berkshire shareholder. It's a club that I want to be a part of. There are very few clubs like that, but I think that's a worthy one for sure. I don't even know what the market cap of Naked Wines is. Wonder if I can show my screen here. Window capture. Let's see. How do I get this up? There we go. Tom, Frank, and Andrew all are looking into it. Had a long chat recently with Andrew recently. I've not looked into it much, but there are apparently a lot of hidden profitability similar to Wix. Okay. Well, of course, that sounds nice. That's another similarity that I'm seeing with Daily Journal as well. Hidden revenues out the wazoo. Basically, they don't recognize revenue until they have go live with their new software systems for these courthouses and other judicial systems. So yeah, that's one where it's kind of hidden. Most people have not fully understood the impact of that, of what those future revenues will be worth for a high margin SaaS business. So you did a quick valuation based on the framework Andrew gave. You've got them pegged at about 7 times forward PE if you back out growth investments. Interesting. Yeah, so I think it was probably maybe the last fiscal quarter or so. So it's dropped quite a bit since when I first saw this as an investment based on Norbert Liu's portfolio change. Hey, Sharon George. Welcome from Kerala. Appreciate you tuning in. Let's see. So the market cap is 264 million pounds. Okay. Not bad. Small. The price is down significantly, and if you, as you say, your adjusted PE is only 7 times. Is this a high margin business? Gross margins are increasing. That's a very attractive trend for the margins. These you can see it. Am I covering that with my stupid face on here? Yeah, let me get my face out of here. Get out of here. So the revenue drop, this was before the pandemic. So do they do a subscription service, Andrew? I'm just curious if you know off the top of your head. Clearly they're growing. They're probably trying to dominate market share for their wine business in some capacity. Seems like a pretty healthy balance sheet based on their net debt position. Yeah, okay, maybe this is probably worth looking into, I'd say. For me, I mean, their free cash flow in the past fiscal year at least was not egregious compared to the current price. Maybe it was, a few months back, 5 months back. So, yeah, this is definitely okay. I'll look into this too. I'm really focused on Daily Journal right now. That's my main thing. I'm not saying that I'm going to invest in it, but it's a very attractive with what I think is a low downside, asymmetric upside type of situation with their portfolio and their underappreciated SaaS business. So that's attractive. Steven asks, you guys ever consider owning the 6 best tech companies alone? Apple, Microsoft, Google, Facebook, Baba, and Tencent, and nothing else? You ask because their growth rates are better than mostly everything else. That's a really good question, Steven. And that sounds almost like it would be sort of not a modified S&P, but those companies, the Apple, Microsoft, Google, and Facebook, and along with Netflix and maybe a couple of others, Tesla, those companies make up a huge percentage of the value of the S&P 500. I don't know what the numbers are off the top of my head, but I would say over 10 years, it's very, very likely that portfolio will beat the S&P. If I had to put money on it, although I don't want to give any false confidence or anything, but I've thought of that. Why not just own a handful of the best businesses in America and in the world, and just don't touch it? Do you really think Google's not going to be around 10 years from now? None of those companies seem like they're going to disappear from my vantage point. So yeah, I might add Berkshire Hathaway to that instead of, I might take out either Alibaba or Tencent, one of those, and put Berkshire Hathaway instead. That's a very comfortable portfolio for me. 20% position. Maybe Apple, Microsoft, Google, Baba, and Berkshire Hathaway or something like that. But Facebook and Tencent too. So yeah, I don't know. I would go for it though. I would buy that. That would be a good strategy. Andrew says you haven't done much digging into the Naked Wines. You're helping Andrew because you've done a lot of work on Boston Beer. Okay, you're getting to know the U.S. alcohol industry. Nice. So Naked Wines operates. They're based in London, I suppose, but they must operate in the United States, or is that part of their growth investment? Because yeah, I feel like if they have a wine subscription service, that's something where you need to go with a lot of expendable income, first of all. And so it would make sense to me to expand into the United States. But I'm curious what the ownership is. Oh, so Greg Alexander actually also has a position in Naked Wines. That's kind of cool. Where is it? Yeah, so about 3% of this reported portfolio gives him some naked wine exposure. Greg Alexander, of course, highly lauded by Warren Buffett, or at least he was at one point. Who knows what their relationship is now? And then Punch Card Management, of course, Norbert Liu, adding 12% last October. Okay. Now, if Norbert Liu, I don't know what his additional portfolio positions look like, but even still, even if this is half of his portfolio, that's a nice size position for him. So yeah, exactly. Andrew, I agree with you. And owning 8 stocks, thinking they're all the top quality, you can get a lot of the safety of the S&P with a little bit probably more upside potential by owning a handful of the actual best businesses. But of course, there is more downside risk with that. But if you're comfortable with it, picking individual stocks. They're barely penetrated in the market. Okay, cool. Well, add that one to the list. So I will try to get that into the... they haven't had huge success in the market yet. Go-to-market is vastly different for U.S. citizens. Okay. I wonder what's different about it. I'm not trying to push you on the spot, Andrew. I'm just curious because... yeah, well, it will require me to actually read some of their annual reports to see what the business actually does. But hopefully, to go back to Daily Journal, I've been reading the latest 10K, and it is amazingly refreshing how transparent the management is writing those annual reports. I feel like Buffett always says that he tries to write his reports to shareholders like he was explaining it to his intelligent yet not so business savvy sister or something like that. And that's how I feel with Daily Journal. They're explaining the business in a lot of depth, and it's actually interesting. They spend a lot of time on the traditional newspaper business, and that is clearly not the future forward for the company. So the SaaS business, it's there. They say multiple times that revenues are not recognized until go live with the projects. So there are hints of potential future outcomes, but nothing specific, which is interesting. Saga asks, ever checked Garrett Motion, owned by Howard Marks and Seth Klarman? Trades are at very low multiples since bankruptcy, but seems to be back on track now. No, I have never looked at Garrett Motion. Sounds like some sort of aerospace company. Is this the right ticker? I'm sure we'll see Baupost on here. Yeah, Oaktree and Baupost. Okay, this is the right one. So, okay, Baupost and Oaktree both own about 5.5% of this company, which is interesting. Let's see, the market cap is under 500 million, so this is a small one. It's interesting that those big funds are going into the small cap territory, which is kind of cool. Auto components, okay. They design and manufacture and sell turbocharger and electric boosting technologies for light and commercial vehicle original equipment manufacturers worldwide. I wonder what the supply chain is looking like for these guys. I don't know if this is totally in my wheelhouse right now, but it probably could be. Let's see, revenues slightly increasing. The margins are a little bit higher than I was expecting. The parts business is obviously higher margin than the actual automobile margins. A huge leap in net income the last year. Kind of curious where that's coming from. Let's see. So their operating income just went up by a huge margin, 83% over the last year. If you have any interesting resources for this, or if I should just go straight to the 10K, which is fine. Let's see what their debt position is, because that would be obviously my biggest concern. Okay, so it's not pretty necessarily, but it doesn't mean that it's a bad investment just because they do have a lot of debt. Their long-term debt slightly down, I guess. Current portion of long-term debt, 207 million. Okay, this would take some looking into. How do I look at where are the ratios and stuff on this? Ticker sometimes is a little bit confusing, the layout. I don't know if anybody else has experienced that, but on a price to sales basis, I don't know if that's not a very valuable metric for a company like this, but okay, yeah, this seems cheap. Seems cheap. Now, is it good too? Thanks, Saga. Looks like they trade at 1x free cash flow. Yeah, cool. I will definitely take a look at this. I like companies that trade at 1x free cash flow. Hidden PE of 1, or in this case, an in-your-face hidden PE of 1, or in-your-face PE of 1. Hopping back to wine, Andrew says I'm guessing management or the company says the U.S. citizens are uneducated in the value prop, whereas Europe understood it easier. Yeah, I think the penetration, if I had to guess, the penetration for wine drinking is not as prevalent here. So companies like Boston Beer, like you were saying with Sam Adams, likely have a greater potential for penetration, but you don't necessarily need to dominate the market to have a good return. And Naked Wines has a low ROIC from Goodbro. Okay. Yeah. So far it looks like there hasn't been an attractive return on the money that they're investing. So we'll see. That's pretty common with companies that are growing really, really fast, I guess. Maybe not making the best decisions. So we'll see. Steven says, you guys see any non-tech companies growing as fast as the tech giants I mentioned? Non-tech that has a moat as wide as the tech I mentioned? It's a good question. Non-tech that has a moat. Well, I would argue that some of the companies that you listed aren't necessarily tech. Well, at least Apple. Apple is tech, but it's also consumer goods in a way. Yeah, I don't know. That's a good question. It does seem to be that a lot of the headline stocks are dominated by tech, though. I'm trying to think. Let me have that stew in the back of my mind, and maybe I'll come back with something better. Andrew points out that that's a generated formula for the ROIC, and many businesses have hidden value for far higher ROIC. Okay, so that might take a deeper dive into the business. And Andrew's example is Boston Beer has a non-tech moat. Cool. Christopher asks, how about a growing fintech favorite that some people keep coining as Mini Berkshire, Boston Omaha Corp? You should look into their annual letters, similar to Buffett. The co-CEO is Buffett's nephew. Okay, I have heard about this company. I'm always worried when people, I hope it's not a self-comparison, that's all I'll say, from the Boston Omaha Corp. That would concern me. But I do like the idea of someone emulating Buffett, because that is the exact right persona you want to have. Now, if it's genuine, that's a good thing. But I don't know about this. Is Boston Omaha Corp a holding company? Are they acquiring businesses? But who knows? Yeah, maybe we're foolish if we're to engage in outward billboard advertising. It's also involved in the insurance brokerage. Okay. investment. Okay. High speed internet service. Okay, so they have a lot of businesses. One key question I would want to figure out is Boston Omaha Corporation decentralized to the point of abdication? Ticker's hit and miss on BOC. Yeah, I would look at the annual reports for this one for sure. But how is the management structure set up? Because one of the very important aspects, two of the really important aspects for Berkshire is the insurance float that they have. Does Boston Omaha have the insurance float so that they can make acquisitions and investments with other people's money that they have to pay back potentially at a later date? And are they decentralized in structure? Because any hopes of having a conglomerate as big or as successful as Berkshire Hathaway, I think, necessitates such a decoupled management system. So, are you interested in investing in that one, Christopher? Have you done any? Hey, iBreak, what's up, man? Thanks for tuning in. So I think Alibaba or Tencent will achieve higher returns from here. From Jay Sauer Financial. Thanks for stopping in, man. I would say achieve higher returns as in compared to what, I guess? Compared to the historical? Even if it's compared to their historical returns, I think probably not, but I think it's adequate enough, especially at these prices, where the risk reward to me personally looks attractive. I think that there are growing pains with with what those companies are going through. There's certainly a short-term impact. I can't imagine that there's a high probability that Baba won't end up back where it was. I'm less versed on Tencent, to be honest. But I know that a lot of investors think that Tencent is even better than Alibaba, the business, because of it's more of an asset-light approach. But Alibaba is also asset-light in a lot of ways versus each other. Oh, I got you. Okay. Yeah. If I had to guess, that's a really hard question. If I had to guess, I'd probably go with my gut instinct is Tencent, just because of the investment portfolio that they have, but I don't know. See, because they've been selling a lot of the stakes in the big companies like Pinduoduo and companies like that have achieved, and JD.com that have achieved scale. And I don't know if that was voluntary. They claim that that was always the plan for the portfolio. So and they have that, and then they also have the gaming business, which is surely just going to keep continuing to explode internationally, both higher margin. So I don't know. Yeah, I'd put maybe not much faith in that opinion, but if I had to bet, I would guess Tencent. But I think they will both be adequate, because Alibaba has things going for it too that Tencent necessarily doesn't. And Tencent does have cloud exposure, definitely one of the leaders in China, but Alibaba is still the clear-cut leader there. So yeah. Christopher, back on Boston Omaha. This is from the annual letter. Boston Omaha runs a highly decentralized business model, okay, and is dependent on both finding businesses we understand that have long runways with ample opportunities for growth and aligning interests with great managers. And you have a small position of less than 1%. Okay. I mean, everything that you've presented to me so far sounds like it's potentially, it looks like they're approaching business with the right mindset. That's what I'll say about it. Trying to emulate Berkshire Hathaway could be a tricky thing because, Buffett in his last letter said that the insurance business that they have is not going to be replicated. So I'm not saying that they're not going to succeed, but it might be harder to get the scale that Berkshire has, because their insurance float operations might not be as strong. But I could be sticking my foot in my mouth. Looking 50 years down the road, maybe we are looking at the next Berkshire Hathaway. So I'm sure that they are headed in the right direction, though. Andrew says, I'd be keen on putting together a study of Munger versus Buffett returns. Can't compare DJCO and Berkshire, unfortunately. Yeah, but you have a strange hunch that Charlie might actually have a better long-term return. There are a lot of books, and maybe in that speech that Buffett gives of the super investors of Graham and Doddsville, I think there are comparisons of the partnership returns for Munger and Buffett and a few others over, I don't know, probably whatever. Buffett had his partnership for over a decade. Munger had his for about a decade, I think. What would be curious, Andrew, is to see if they had kept running their partnerships and didn't go into Berkshire, who would have had the longer career. I would have loved to see that too. So maybe we can look that up later, or you can just maybe try to Google it. In Poor Charlie's Almanac, also in the first chapter, Munger's partnership returns are recorded there, and I'm sure there's plenty of Buffett partnership returns as well. So that would be for me the true comparison. Hey, just one. Why has it been a long time? Because sometimes life gets in the way, man. Yeah, actually, I had COVID a few weeks back, and then before that, just a lot of work-related stuff. Just trying to get my life back together, Now, spending a lot of time reading. So one of the struggles is prioritizing reading versus doing live streams like this, or putting videos on my YouTube channel, or investing. And that was one of the themes we talked about in the beginning of this, is trying to really make sure that I'm dedicating time to the investment practice, because that's really where the YouTube thing is fun. But I think the real returns are going to come from having good investment returns. And the best way to get investment returns is to spend time looking at investments. So yeah, it's just a matter of prioritizing time right now. But I do hope to do these more. I do have the house to myself right now. That makes this easier to do as well. So there are a bunch of different things. Andrew says that Buffett gets the GOAT title, but it would never have evolved if it wasn't for Munger. I struggle when deciding who the GOAT really is. Yeah, I think I agree with you that separating the two from each other is kind of a fool's errand, because Munger seems to have more of a propensity to act with more concentrated vigor, I'd say, and Buffett might have. Munger says that Buffett would have gotten there eventually without Munger, but yeah, even having an extra 5 or 10 years of understanding the power of low or high margin, high return on capital businesses surely helped Buffett evolve as an investor. So yeah, if they hadn't met, neither would have certainly been as good, I don't think. Good morning, Jason, after dinner investor. Welcome to the party. Yeah, Stephen, yeah, sorry, I didn't see your comment, but yeah. Warren would have eventually changed. He's too smart not to have. After dinner investor says, what's your biggest position, CJ? How big? It is, I think it's Micron. Let me tell you. I don't really know the percentages that well. I don't know, let me check real quick. Hold on. I'll get that info for you post haste. Why is my camera so good? What am I using? Sony a6600. My Micron position is 34% of my portfolio right now. So yeah, I wish it were more, but I'm undisciplined and have too many positions. So what can I say? Christopher, absolutely, it's tricky. I think one of them is going the Constellation route, but appreciate the thoughts. Oh yeah, that's back on Boston, Omaha. Hey, I'm definitely gonna I'm adding that to the list along with the Garrett. Who mentioned that earlier? Saga mentioned Garrett Motion. I'm also gonna take a look at Naked Wines. There's so many ideas. What can you do? So much opportunity, so little time. And Constellation is also one of these businesses that is legendary, but I still don't, I don't have a great understanding of it other than management has seemed to have an excellent track record of acquisition. So we'll see. Jason asks, if the company doesn't employ Buffett, Munger, Jane, Abel, Combs, and Wessler, then let's not compare it to Berkshire. That's what, I do. I think their writing style seems to be Berkshire-esque, and their goals seem to be Berkshire-esque, but obviously it's too early to say, but I don't want to write them off. So we'll see. And I think there's that legendary aura of one of the, as Christopher said, one of the, maybe one of the founders is Buffett's nephew or something like that. So what I hope is that we don't see them leaning on anything like that, trying to access the stardom of Buffett just because they're related or something. I'm just talking out of my ass right now because I don't know. But what was it like meeting Jack Duffley in person? He is a cool guy. Yes, absolutely. He's a cool guy. I really enjoyed my conversation with him. We just spent probably 2 hours sitting in a coffee shop just talking about stocks, real estate, which Jack is more well-versed in than I am. And we talked about YouTube, content creation, just sharing our investment processes and journeys and what we learn and all that fun stuff. So yeah, it was a great time. I'm sure we'll do it again. It's very convenient to have another like-minded individual living so close to me. So that's really cool. Dollar figures is fine too. Oh yeah. Yeah, 34% of X equals what? I'll let you hunt that one down, Jason. Steven asks about Intel. Do you think you can positively change and catch up to Micron and TSM with all their investments now? Or their bureaucracy, as with many big companies, holds them back? I know Jason, after Dinner Investor, was probably looking into Intel for a little while. I think I remember. I don't know where he landed on that, but I would say that Intel is not. I don't know if I would include Micron in that category, because Micron is more about memory, and those guys are more about CPUs and chips. So it's slightly different space in the semiconductor space. So if ADI wants to weigh in, or maybe on his next tea time, he can talk about Intel again and give a nice little wrap up about what he's learned from them, because I like the direction that they're pushing, but yeah, it's hugely capital intensive. So it's always hard, especially if you're coming from behind. But Intel has the DNA, or at least they had in the past, of being able to compete in the space. So I certainly wouldn't count them out, but might want to put them in the too hard pile for now, for me personally. Boston Omaha just wants free cash flow from the high margin billboard business. Yeah. Who doesn't? So I wonder what their next avenue is going to be, because I don't know if billboard advertising is going to take them to the promised land, but they're looking for high margin businesses. That's certainly going in the right direction. Just One says, if people are like decentralized businesses, then look into the Nordics. Many great businesses, high valuations though. Yeah, it could be a very good place to create a watch list in Nordic businesses. I'm not off the top of my head. Don't know any, but there are pockets like that all over, especially for small investors. Andrew asks, any investors you know in the Boston area you can connect me with? It's lonely out here in the investing space. I don't think I know anybody who lives in Boston. I'm sorry. New England in general. But there's got to be a value investing community in Boston, isn't there? There's got to be something. Andrew, you are going to be the pillar of that community. It seems like you're going to have to start the Boston Investing Club, the BVIC. Jay Sauer. Semiconductors seem like a tough industry. Intel feels behind technologically. Can companies like TSMC and Micron have a durable competitive advantage? Yes, that it is a tough industry, and yes, they can have durable competitive advantages, depending on how rationally all of the players behave, basically. Their durable competitive advantages are the fact that it's such a high capex business that a company trying to replicate whatever Micron has for their foundries and stuff is going to be extremely expensive. And they also have IP that you can't copy. It takes probably decades of time to get to the expertise that these companies have, and those are just a few of the durable competitive advantages they have. Now, if they do start a price war, they say Micron and Samsung and SK Hynix all start trying to undercut each other, which is what the industry has looked like in the memory business, at least for most of its history, then you start to see that those durable competitive advantages are less and less valuable because it's a race to the bottom at that point. So the companies in the space right now have the advantages, but they can always screw that up. So it's an oligopoly. Intel from Jason. If it works out, it's amazing. Okay, you get a double or triple over a long time, big deal. But it might not work, and I can't judge their competition, so I passed. Yeah. Hey, see you, Jason. Oh no, not you, Jason. See you, Andrew. We will catch you later. Thanks for chatting. Quick and easy investment decision. Put it in the too hard pile. Pass. I like that style. Do I own Alibaba, Tencent, or Prosus? I own Alibaba, and I own a tiny little piece of Tencent shares over the counter. So tiny exposure to Tencent. David Abrams. You say David Abrams, but what about him? Andrew's looking for companies with Boston in the name. Yeah, so you can probably find a nice concentrated portfolio of all the companies. Boston Beer, Boston Omaha. After dinner investor asks, what is my biggest investing mistake from the last year? Mine was not cloning Buffett when he bought back Berkshire. I should have gone 20+%. Yeah, my biggest investing mistake from the past year. So what is the date? March 26th. Probably Hmm. Yeah, I mean, when Buffett, okay, so to piggyback off of your point real quick, when Buffett buys back shares in Berkshire, you don't need much of a bigger flag waving in your face. Um, my biggest investing mistake over the past year is probably putting too much of my portfolio into Alibaba. Uh, I don't think I properly weighted it, is what I'll say. So it's obviously been a performance drag for me. I haven't sold a single share, and I've added on the way down as well. But um, I think it's pretty clear that my entry point was wrong, even though I think the long term price will be higher than where I purchased. So I think I allocated too much to that position, which in turn is a huge opportunity cost drags for me. So yeah, I wish in hindsight I had added when it was at $80 per share instead of 160 or whatever it was. But who cares? C'est la vie. I wasn't just gonna sit on. Yeah, you made the same mistake. I think a lot of people did. There's low. I mean, who knows? Some people say that there's super high risk of a zero. I think there's a low risk of permanent loss of capital, but the opportunity cost is certainly there, especially for people who are adding at the Munger levels around 230 or whatever. I could have cloned Pabrai in doing the tax loss harvesting thing. But if I had ended up cloning Pabrai, then I would have put a big position into Tencent or Prosus, and it would have gone down just the same amount. So I'm glad I didn't just do a blind clone there. But yeah, we'll see. I mean, 10 years, 5 years, a long time to wait, but I'm not too worried about it. Hey, Tim. Do you think Munger is continuing to average down on Alibaba this quarter, Pabrai averaging down on Prosus? My gut instinct, so for Pabrai, my gut instinct is no, he's not averaging down on Prosus. I think even with the Alibaba position, it wasn't, he wasn't putting 50% of the portfolio or anything crazy. I don't think it clearly wasn't one of his highest conviction bets. And although he thinks that Tencent is a better business, I would imagine he's finding a lot of opportunity in places like Turkey. So I think that's probably where he's putting most of his money, if I had to guess, into smaller, more liquid situations in countries that, But as for Munger, let's just say I wouldn't be surprised if he adds more to Baba. I hate the old saying, if you loved Alibaba at $200 per share, then you'll love it at 150. That's kind of just cheesy, but when the shares get down to $80 per share, for somebody who has who has the supreme confidence in his decision making, like Charlie Munger, I wouldn't be surprised if we see maybe not a double down again, but maybe some additional ads. Yeah, I wouldn't be surprised. Steven's biggest mistake was selling Apple too early to buy a car. Had I waited, could have made at least 5 times my investment. Oof. That hurts. Baba is 90% of my portfolio, an average price of just under 200 per unit. Yeah. I mean, like I said, Baba is also a sizable portion of my portfolio. I think clearly it's undervalued right now. I don't need to mince words about that, but I'm sure over the long term that the chances of it not returning to that are a lot lower than maybe a lot of people expect. So yeah, just an opportunity cost thing. It's just annoying more than anything, because there are a lot of micro cap, small cap special situations that I'm kind of interested in having some money ready to deploy, but I don't want to sell anything. So after dinner, I think investing with Tom is a really good investor. The more he talks about investing, the more I'm like, wow, this guy really gets it. Yeah, Tom is an inspiration to us all. He has internalized from an outside point of view. He has internalized the teachings of Buffett for sure. It seems like he's very slow to make any changes, which, the best performing portfolios are those of the dead. So I think it's probably the right approach. The Guy Spear approach of no turnover. That seems to be the way forward. So yeah, Tom is great. His videos that he puts out on his channel are wonderful. So can't say enough about him. After dinner, hope it was a nice car to buy Apple. Yeah, I mean, sometimes in life though, purchases need to be made. Not everything is just a rational purchase. Sometimes you need to buy a house. Sometimes you need to buy a car. Especially if your work depends on it or something. But yeah, we all make mistakes, and I mean, we live and we learn. Just One agrees with ADI about Tom, I'm assuming. Yeah. Tom's one of these guys I think that we should be very grateful to have him just sharing. Because just even, watching his videos, it gives you this notion that, okay, I'm connecting with this psychological approach to investing. And I think he does a really good job coming across as rational. And I think there's no higher praise for an investor to just be behaving rationally, because most mistakes are made emotionally. Alibaba increased buybacks, happy with the capital allocation. I'm confident holding long term. Yeah, that was huge. That was really, really nice to see that that for the shareholders, or we're not direct shareholders of the company, but buying back shares, always a good sign, and especially when the price, in my opinion, is so low. And management came out straight up and said the price, especially for our future growth, is not making sense. So, and yeah, they can't always allocate capital to buying back shares because they have a lot of growth opportunities still. So we'll see. Steven, the car is an investment to start a rental car business, but then COVID. Oh man. Steven, you live and you learn, whenever you want to start a new business and then COVID rolls around, ruins your plans. I'm really sorry to hear that. I hope you are doing well though. Yeah, that's rough. But I hope you've been able to make the best of the time. And that's just something in investing. There's no guaranteed winners, no guaranteed losers. And you're trying to start a business. You're being a man of action. You're taking action, which is super admirable. So, yeah, I'm just rambling on, but there will always be more time to buy back Apple, though. All right, gang, it's been about over an hour now. I am curious if anybody has any last minute questions, because I might start to wrap this thing up. And actually, used car prices just last year were super, super attractive for resale. So, yeah, I thought about selling my car, but then I would have stranded myself, and I wouldn't have been able to buy a car back. So, well, maybe I'll just leave you with some last parting words here of what I'm going to try to do is spend an hour every day, make sure I am working on my investment practice so that I can spend 365 hours every year looking for that one new idea that might take me to the promised land. So we'll see. Hope it was a secondhand 3-year-old car. Yeah. 3 cars now, but some lessons are learned only once in business. So just some passive income now. Hey, yeah. That's right. It's good. Well, it sounds like a challenge that hopefully you'll look back fondly on. After dinner investor, what's your most recent position? How big of an allocation? Yeah, I think my last addition was that 10-cent position, which was 1% or something like that. So, not very sizable, and that was sometime mid last year or something like that. So, not a lot of action in my portfolio. Tim, thank you. You didn't get on too late. I just started too early. Don't worry, man. I really appreciate you joining the chat. It's very, very nice to see you here. Yeah, Steven, thanks, man. I appreciate you joining as well. Best of luck on your business. I really hope it becomes a 10-bagger for you or a 100-bagger. Let's get that financial independence for sure. All right, guys, feel free to reach out to me through the comments section, or you can email me at contactcjwilson@gmail.com. I'll try to be doing more of these live streams. I know I say that every single time I do a live stream, but I do have a lot of fun talking to you guys. So. And yeah, I think that about wraps it up. Really appreciate you all. And I will talk to you later. Best of luck on your bargain hunting this weekend, and I'll see you soon. Thanks, Jason. Yeah, I'll see you, man. Hope to catch up soon. Bye.